GM, good morning. Welcome to The Milk Road Show, the daily crypto show that's as energizing as a triple shot of espresso without the jitters. I'm your host, Jay Hamilton. Now, on Tuesday, July 23rd, that's tomorrow as of this recording, the ETH ETF goes live in the US. Now, this week is all about ETH. We've got daily episodes to build your investment thesis for ETH so you can confidently explain to your wife or your husband why ETH is one of the largest holdings in your portfolio. And here to guide us today is legendary crypto investor Lark Davis. Lark, welcome back to the show.
Great intro. That's a great intro. And happy birthday to Ethereum, by the way. It's a pretty momentous occasion. Not only has Ethereum now been around for 10 years, but now we've got these ETH ETFs listing. I mean, my goodness gracious, what a wild time to be an Ethereum investor, but to be in these markets as well.
It's incredible. And it's one of those things that we're going to look back on a decade from now and be like, wow, I can't believe we were in that. But when you're in it, it's hard to realize how massive these things are. And as Lark, you said, ETH's 10-year birthday is today. Can you believe that ETH is 10 years old? Now that's ETH, the asset, not Ethereum, the blockchain that is 10 years old today. ETH ICO'd back on July 22nd, 2014. And on that day, you could get ETH, 2,000 ETH for one Bitcoin. 2,000 ETH for one Bitcoin. Today, one Bitcoin gets you 20 ETH. So, and there's a great tweet that I've got up on the screen from Justin Drake that talks about how few assets have outperformed Bitcoin over that 10-year period. And even fewer have outperformed it by 100x. So ETH deserves a lot of credit here.
Well, Ethereum's done incredible things over that 10-year period. You know, it's interesting. I started posting videos around 7 years ago. It's around my 7-year content creation anniversary as well. And Ethereum's not the first asset I bought. I bought Bitcoin, then I bought some random altcoins, XRP, NEM, Digibyte. And my Ethereum came maybe a few weeks later, and I started diving into the Ethereum ecosystem. The thing is, it's been interesting to watch Ethereum grow up because that's essentially what's happened over the last 7 years of me creating content. When I first looked at Ethereum, you could do almost nothing on Ethereum except ICOs. ICOs were the use case for Ethereum in 2017. And some of those ICOs ended up being pretty interesting. For example, Chainlink and Aave, they had ICOs back in 2017 or maybe early 2018. Don't remember the exact dates of them, but this stuff all came out back then. These were ICOs, these giant fundraisers that happened back then. The vast majority of them, of course, as we saw with NFTs, as we are seeing now with meme coins, were scammy bullshit, right? But some great stuff came out of that period. But that was the only real use case for Ethereum back then. There was very little like stuff happening on chain. Yeah, there were some very early innovations with NFTs. There were some very early innovations with smart contract platforms like protocols like Ether Delta. Now, if you never used Ether Delta, it was the worst possible exchange you could imagine. It was so bad. And it was it was basically the only, like Uniswap was like this revelation, like, oh my gosh, Uniswap's amazing. As Ether Delta was like, I don't know, going down to a burning dumpster fire and diving in, hoping you come back out with some coins. It was bad, right? Shout out to anybody who used Ether Delta back in the day. You know exactly what I'm talking about. Anyway, it was using smart contracts. It was actually like the first really decentralized exchange on Ethereum. Liquidity is terrible as a mess, but it started that sort of like, you could see where everything was going with Ethereum. And in 2018, we had a bit of an existential crisis for Ethereum. What's going to be the next use case beyond this ICO mania that happened? Can we actually start catalyzing real use cases and real products? And of course, around late 2018 or into early 2019, that's when we actually saw stuff starting to launch on chain, these lending and borrowing markets and all these sorts of things. And that led into 2020's DeFi summer and all the craziness around that. So it's been wild to watch Ethereum go from this baby blockchain looking for sort of builders and developers and use cases to now being this just dominant behemoth in the market. And I know, Solana's coming to eat Ethereum's lunch. Solana's got a lot of work to do to Ethereum's lunch. I mean, look at the ecosystem, look at the money. And we're not talking about, because it's not just Ethereum anymore. It's this just massive octopus-like 100 tentacle beast that's now all these layer 2s that also demand Ethereum. So it's wild to see how far Ethereum has come. It's wild to see how far it's grown as an asset and everything that's happened over the years, the switch from proof of work to proof of stake and all this cool stuff. So it's been great to watch.
Yeah, it's truly incredible. Now, one of the most important things to understand with any asset, especially those in crypto, is supply and demand mechanics related to that asset. And that's what today's show is all about. Before we jump into the elements that are most impacting Ethereum supply and demand, a lot of people call ETH ultrasound money. You hear that a lot. For those who don't know where that term comes from or don't understand that term, can you explain why people call ETH ultrasound money?
So the ultrasound money is this idea of it being even better than sound money, right? That it is a deflationary asset in particular is where a lot of this comes from. There's actually a website, Ultrasound Money. You can go and watch the burn going on over there. And that's part of the supply mechanics, right? Is that it's a deflationary asset. Now, depending on where we are in the market, if you look overall since the merge happened, it has been deflationary. Not by a lot. We're down like 0.37%. When I took this screenshot last week, we are up a bit on the week. That's the 7-day and the 30-day. We were slightly inflationary. As you can see, we're trending back up towards the zero line. But overall, we've been deflationary. And as soon as on chain activity picks up even a tiny bit, we'll go back into a deeper deflation mode. So, this is kind of where that idea comes from, that we have had this supply burn. I mean, essentially, in case you're not aware of this, Ethereum basically has a perpetual stock buyback mechanism. So every time there is a transaction, a little bit of Ethereum essentially is getting taken out of supply forever. Now, right now, Ethereum has an official inflation rate around 0.6%, I think around there. Now, with the deflation and the burning, as you can see, right around minus 0.1%. So that's a significant amount of deflation. It's a total of 0.7% pressure being burned off the market, right? So it's very interesting to watch how this deflationary mechanism has so far operated on the market, because everyone talks about Bitcoin being this, superior mathematical asset, and big Bitcoin fan here, but Bitcoin's still inflationary and is going to be inflationary until the year 2140. I ain't got time for that.
Yeah, you won't be around anymore then,
No,
unfortunately. You'll be giving all
no,
your Bitcoin to your grandkids at that point.
that's right. That's right.
Okay, so ETH is deflationary. That's one of the major impacts on the Ethereum supply. What are the other things that are impacting Ethereum supply?
The other biggest thing I would say on the supply side, before we get to the demand side, because the demand side is very interesting too. The supply side, I would say, is the Ethereum staking contract, a beast of a contract, a wild staking protocol that I think is generally misunderstood by most people in the market. Right now, we have around 48 million Ethereum in the staking contract. Wild. That's a third of the Ethereum, by the way, for anyone out there counting. Actually, a little bit more than a third right now. So here's the thing that you need to understand is this is basically a giant black hole, some kind of just value sink for Ethereum, because a lot of staking protocols, you can unstake your coins and in 21 days you get your coins back. And everybody could theoretically unstake tomorrow and everybody gets their coins back in 21 days. Ethereum is not built like that. Ethereum has a maximum daily limit for how much Ethereum is allowed to be withdrawn from the staking contract, obviously for security reasons. You don't want everything to exit at once and you have no validators. Everyone's in a big amount of trouble. So here's the deal. If you do the math, if you were to try to get all 48 million ETH out, so everybody wakes up tomorrow and everyone wants to withdraw their ETH, it's going to take about 3.3 years right now. So just think about that for a second. This 48 million Ethereum is big time stuck in there. If even a third of that wants to exit the market top, they're looking at a year exit queue. So this dramatically changes the ability of new supply to enter and dump into the market. Okay, that's very, very interesting to consider here, because what do we see with Bitcoin mining, for example, continual supply coming into the market? And I know we've covered the mathematics of ETFs are buying more, et cetera, or even these big scary events. Oh, Mount Gox doesn't have Ethereum. Oh, the UK government's got 61,000 Bitcoin. They don't have any Ethereum, do they? So there's also those supply side mechanics to think about too. So when you start to understand how the supply of Ethereum is actually working, it paints a very interesting and very bullish picture that provides a lot of, let's say, space for price appreciation.
I'm glad you brought up price appreciation because we're going to get into your price targets for ETH a little bit later in the show. But next, let's talk about demand. So, What are the things that are currently impacting ETH demand?
So there's two major things, two really big things. There's a lot of little things that we can talk about, but I think the two biggest, most impactful things for Ethereum demand, number one is layer twos, and number two is ETFs. So let's start off with talking about the layer twos, because layer twos are this wild value add to Ethereum. And I know the layer two seem to be a bit daunting or even sometimes confusing or a bit misunderstood, but essentially, the vast majority of these layer twos, there's some exceptions, but the vast majority of them require Ethereum to pay gas fees on chain. And you need Ethereum for locking it up in DeFi on like Aerodrome Finance on Base, for example, stuff like this. So, what have we seen? We've seen Ethereum in layer 2 networks go from 6 million a year ago to 12 million now, over 12 million, 12.5 million actually. Now, this is an absolutely insane number because that's 10% of the Ethereum supply. Now, yeah, I know that can be sold. People can go to Aerodrome Finance or whatever, wherever else they're trading on their layer 2s and sell their Ethereum. But the fact is, 12 million Ethereum has been deemed worthy by the market to put into layer 2 networks to be utilized in layer 2 networks. So that's a very interesting thing. And what if this doubles again during the bull market and we go up to 24 million? That's wild demand for Ethereum for access to, again, a wide range of DeFi products and NFT products, and even just paying on-chain fees and stuff like that, which I know are very cheap on layer twos, but you still need to have Ethereum to pay those fees. And it still all comes back to the deflation mechanism, the whole picture of the Ethereum asset class. So bullish on layer twos as a value add to Ethereum. Not necessarily bullish on many layer two tokens. That's a whole different conversation, though. And the second big point here, of course, has to be about ETFs, which, as you so duly noted at the start of the show, is launching. By the time you've watched this, they probably will have launched. So right now, we have about 16 million Ethereum on exchanges. Depending on who you talk to, some people put that number lower, around 12 million. So bit of discrepancy, but depending on how different organizations are counting it. But regardless, that number is down, whether 16 million or 12 million, it's down 50%, more than 50% actually in the last 3 years. And you can see the purple line on the chart there shows how fast we have seen Ethereum being taken off exchanges in the last few years. And what's wild is this is right through the bear market, right through the bear market. I know we had some sort of peak sell-offs in 2022 when people sent some ETH to exchanges to get out before the market went bad, all that kind of stuff. But then look, from late 2022 right through 2023, right up to now, it's been non-stop accumulation, non-stop taking Ethereum off of exchanges. So that all fits into the picture of Ethereum ETFs. Because what happened with Bitcoin? We need to look at the Bitcoin ETF because it's really the best example we have right now for how a mainstream crypto product is going to perform. Now, Ethereum is not as much of a household name as Bitcoin is, but I think within investing communities, it's definitely a known asset, right? We're not going down to random cryptocurrency number 200 or whatever on CoinMarketCap. We're talking about Ethereum. This is the second most important asset in the cryptocurrency market. It on any given day is worth about 20% of the total cryptocurrency market. And if you account for its wider ecosystem, accounts for a gigantic percentage of everything built in crypto. So Bitcoin ETFs, have seen so far in about the first 6 months of trading around $17 billion in total net inflows. That's a lot of money. Now, those initial inflows were able to push the price of Bitcoin from $46,000 to $73,000 in about 6 weeks after launch. I know on day one, there was some kind of, a bit of a sell off on day one. Price of Bitcoin went down 7-8% or something. First day of trading was, he was still the news. Now it's going to go to zero. No. Now we have billions of dollars flooding in from Wall Street, which is exactly what happened. So, will we see something similar playing out here? Will we have a third of the inflows? Because if we have $5 billion of Ethereum bought in the next 6 months, that's a significant number considering everything else, exchange volumes falling, demand going up on layer twos, and everything else we've talked about so far here. That has real explosive price potential to see such a massive amount of accumulation potentially happening from these ETF products. So how much it moves the price remains to be seen, but it's definitely going to be impactful.
Yeah, when you say 5 billion, you're not throwing out a random number. We had Matt Hogan from Bitwise on the podcast last week, and that is his exact prediction is that we'll have 5 billion in ETH ETF inflows in the first 6 months. And go back and listen to that episode if you haven't listened to it because he breaks it down beautifully. Lark, when we look at ETH from a portfolio allocation perspective, from a investment thesis in terms of price predictions or price targets, what are you thinking right now and over the next 6, 12 months?
In terms of portfolio allocation, it's interesting. I didn't necessarily plan it like this, but if I look at my portfolio, it approximately breaks down to how the crypto market breaks down about half Bitcoin, 20% Ethereum, about 30% altcoins. So it's interesting from that perspective. How much Ethereum anybody should have, I don't know. But when I look at Ethereum as an asset and why I remain bullish on it, why I think that it's going to go over $10,000 this market cycle, and I actually think that our market peak price, assuming that the cycle works out as we hope that it's going to, that the peak price for Ethereum could be somewhere around $15,000, perhaps even pushing at the peaky peak top for that day, that moment, that second, the one guy who gets to sell it for like, I don't know, $18,000 per coin, then it goes down. But I would look at personally selling anywhere over 10K as being a pretty good deal. Now, I've been in Ethereum for years. I've got, I would say, gosh, I'm not exactly sure. I've messed it up so much over time by swapping back and forth like wrapped Ethereum, and it screws up your cost basis like officially, but even though you're not technically changed anyway. But I'd say I accumulated a lot of Ethereum around 200 and 250 bucks back in the day, and so if I can sell that for $10,000, I'm gonna be a happy camper, man. I really will be. That'll be fantastic. And look, if we see it go to $15,000, which generally lines up with actually Fibonacci's 3.618 lines a little bit above that. So again, around 15K, I think would be an interesting area for like a very high market peak price. But personally, I think anything above 10K is going to be a decent area to sell to. Yeah, I think, okay, it goes to 10K and you miss out selling at 15K, just as an example. Well, you've only missed out on 50% of gains. Depending on where you bought your Ethereum, right? It could be a really good time to start considering taking some profits on the market. Because, at the end of the day, bullish on Ethereum. It's definitely one of the assets I will rebuy in the next bear market, but also bullish on money and profits. So, fan of those.
Ditto, ditto. What about ETH beta plays in your portfolio or other ETH assets that you hold, whether it be L2s or meme coins? What do you like in that space?
Sure. I think one thing I could say about the layer twos is that bullish on layer twos as a technology, not super bullish on layer twos as an investment. And I think Arbitrum's been a great example of that. It has been until Coinbase launched was the most bullish layer two, and it's still one of the leaders in the layer two space, obviously. And incredible things have happened over there. And none of that value that has been created in Arbitrum, they've created massive value. None of that value has gone back to Arbitrum governance token holders because it's at the end of the day, a useless governance token has almost no use on chain. It's not used in any Arbitrum DeFi almost at all. There's no staking rewards. What are you going to do? You're going to spend 5,000 bucks, get your ARB tokens, and you're going to go govern the platform. Good luck with that, buddy. The whales are going to run it anyway. Your opinion's irrelevant. And is that really what you want to spend $5,000 for? $10,000, $100,000 to go govern Arbitrum? No, you don't. No, you don't. You want to make money. So, from that perspective, I don't see a lot of layer two tokens as being great investments per se. There's some that do capture, let's say, some more value and some more interest. Maybe a shout out to like Mantle, for example. I think they've been doing a lot of stuff, but they're not using Ethereum on Mantle. They're using the MNT tokens. So it's capturing more value because it doesn't need fees, et cetera, et cetera, et cetera. So it's a bit of a different use case, bit of a different idea there. But in terms of things I'm quite bullish on, anything base related. Base doesn't have a token, and I'm not sure that Base needs to have a token. They really don't, and I'm not sure they ever will. It'd probably be smarter for them not to have a token, to be honest, because they just don't need to have a token. Now, will they launch a token someday? I have no idea, but right now, I think if you look at the Base ecosystem, and I'm speaking on my own bags here, these are coins I own in my portfolio. Obviously, guys, DYOR, please don't just because I mentioned something, don't go around and make your money into it, okay? But I'm holding what I think are some of the biggest bets for base exposure, right? So I think that the layer two scene in Ethereum is definitely an interesting area to be allocating money to, just not necessarily those layer two tokens themselves. So like Aerodrome Finance, the biggest decentralized exchange on the base network right now. I've got Brett in my portfolio, the biggest meme coin on base right now. It's getting a lot of traction, a lot of organic traction. I've also got some more speculative bets in like Benji, the dog coin of base. And we added a tiny bit of Mr. Miggles to the portfolio for our 10K portfolio challenge. So we'll see how that cats, I don't know, not the biggest cat fan in the world, but we'll see how that goes. But these kind of beta plays within the Ethereum wider ecosystem, I think on layer twos, base in particular, other layer twos, we'll see. I think there's gonna be some real standout coins on some of those other protocols. You know, you might look at Linea, right? Very strong connections to the entire Ethereum ecosystem. They'll probably release a useless governance token that will all farm and drop. It'll be great. But then you can look at some things within the Linea ecosystem, maybe the Foxy meme coin, for example. Maybe that's something that'll do well if Linea does well, as an example. So these are kind of how I'm thinking about Ethereum beta plays right now. I know there's the old guard of like Ethereum DeFi and stuff like that. And look, I think if Ethereum does well, probably like OG meme coins on Ethereum, like Pepe might do well, right? And you'll see stuff like Maker and Aave do well. And these, what's interesting too about, just as a quick aside, stuff like Maker and Aave, these are real protocols with real revenues, the most powerful, impactful protocols in the entirety of the cryptocurrency market. Like, look at Maker DAO; it's worth $3 billion or something today, and Pepe's worth $4 billion, which is just a picture of a frog, just a frog picture. MakerDAO's over here, but we're working with BlackRock and $1 billion in real world assets, and we're one of the most important protocols with positive cash revenues of millions of dollars a year. Nobody cares. They need to change, much like my advice to Chainlink. Change your logo to a dog picture. My advice to Maker: change your logo to a cat picture. Boom, boom. I solved your marketing problems. You're welcome.
oh, oh my gosh, it's sadly true. There is so much nonsense in the way investments work, not just in crypto, in all investments, all assets around the world. Great advice, Lark. Appreciate your takes on Ethereum and the broader ecosystem. Want to move off of Ethereum quickly just to talk about some big news that happened over the weekend, which was Biden announced that he will no longer be running for the president again. Now, we're not a political show, so not looking to discuss the political implications of this. But as we discussed last week with you, when we reviewed the top catalysts for 2024, the US election is one of the largest catalysts, not just for the crypto market, but for all markets as a whole. What was your reaction to this news over the weekend?
I think it's interesting that the market, and I mean, everybody's kind of expecting it. The market didn't really care. We didn't really see very much reaction at all from the market, as opposed to the Trump assassination attempt. The markets pumped like crazy afterwards because everybody thought, well, this is it. You know, we're going to get Trump as a president, and he's going to do all these positive things for the economy, positive things for the crypto markets, et cetera, et cetera, et cetera. Whereas with Biden, it was kind of like, yeah, we all knew he was probably going to drop out anyway. You know, the writing's been on the wall for a little while. Now, the question becomes, and not to get too political, but the question becomes, is who's going to end up being, as if for crypto voters out there, if we talk about single issue voting. I know politics is complicated, and there's a lot of reasons to vote for people, not vote for people. But I think if we continue to look at the single issue of crypto, it's pretty obvious that Trump's put himself very much in that very pro crypto camp, and that a lot of crypto money has got behind the Trump campaign, whether that be, you know, Bitcoin money. He's literally speaking to Bitcoin Nashville this week, and all the other stuff. Coinbase has been lobbying with him. They've got PACs supporting him, stuff like that. Because the truth about the Biden presidency is it has been a rapidly anti-crypto White House, from Operation Choke Point 2.0, where they secretly tried to strangle any banks that worked with crypto, which is gross, to what the SEC's been doing, going after Coinbase, going after Kraken. Are you kidding me? These are the squeaky. You're trying to push all these companies out of America, and it just doesn't make any sense from a strategic perspective, from a tax perspective, from a business innovation perspective. It's like the equivalent of like, oh, this newfangled thing called the internet's out here. Let's crush it. Make sure that America doesn't have any internet companies. It's so behind the times. And so my thought would be is that whoever they decide to put in to replace Joe, whether that's going to be Kamala or somebody else at the convention, it's going to be a new face with the exact same policies, right? Unless this person comes out and says, I am wildly pro crypto and we're going to do all these things for cryptocurrency holders. We realize that it's 1 in 5 Americans, and it's a giant voting block, et cetera, et cetera. And I just don't see that happening, because look at the proof in the pudding, right? Where have the Democratic Party been on crypto issues? They've been strongly against crypto issues. So that's my take on it.
Yeah, I think That's probably the likely scenario. In case you missed it, here's what else happened in crypto news today. But first, thanks to our sponsor, Agoric. Ever wish your crypto apps played nicely together like your favorite web apps? Agoric is making that a reality. Our sponsors are building a seamless DeFi future, and the coolest part, it's all powered by JavaScript. That's right. The language you already know can unlock the future potential of Web3. Head over to agoric.com/EAP and join Agoric's early access program to start building the decentralized future. Also in news today, Mt. Gox, the infamous crypto exchange that collapsed in 2014 after losing a massive amount of Bitcoin, has transferred a small amount of Bitcoin, 0.021 to be specific, to a new wallet. Blockchain analytics platform Arkham Intelligence, which we just had on the show, identified one of the recipient addresses as belonging to Bitstamp, a centralized cryptocurrency exchange. Now, this small transfer signals that Mt. Gox might be gearing up finally for a round of payouts to its long-suffering creditors. Bitstamp has previously stated that it would distribute its allocation of portion of the Bitcoin repayments to Mt. Gox creditors as soon as possible. That's all for today, folks. Thanks so much for listening in and have a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.